The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. The first chart that I've posted into Tiger TV today was this chart of Disney. And the reason why I wanted to put that in was just to show you the beautiful harmony that's in this stock using the Fibonacci sequence of numbers on a daily basis, counting the bars, and then also on the price swings. And you can see the high to high. This chart is brought to me by one of my good colleagues over in Germany. He happens to send it on, and we wanted to thank Andy for this beautiful piece of work showing the symmetry that we had in Disney when it was making its high up there. Okay, the next order of business is we are looking at the next chart, which is the New York Stock Exchange Index. Overlaid on top of that is the Dow Jones Industrial Average. We've talked about this divergence that started back in July. It reappeared again in September 3rd. And now what we've done today is we've just made, as we were coming onto the air, we just hit the 786 retracement in the New York Stock Exchange Index exactly at 10,440, I believe, 10,450. And so that should hold. Now that was off of the April lows. The April 5th lows. Now we've already taken out the lows of August. Now we on the Dow Jones Industrial Average, we're only making a 61% retracement of the August lows, but we're not even close to where we were way back in April. So there's a big divergence in the market here, and we could get ready for a bounce at any time, just given the fact that what's happened today. My scenario was that we are going to go a lot lower. The question is are we going to have a rally before that happens? And no one knows the answer to that. Every time buying comes in, it seems to get hit really heavily with selling. So we just have to wait and see if there's going to be a rally or not. Now, I wanted to mention what happened in 1987. It was very, very important because we had the market on October the 16th, 1987. The market was making the stock market was making a new low, and what was happening is that it was coming in at the same time that we were having a Mercury was going retrograde at that same time. If you'll give me a second here, I can see if I can get this pulled up here, and we'll take a look at it. We also had a situation in 1987 where we'd have a lunar eclipse coming in here on Wednesday, October the 8th, and then we have Mercury going retrograde on Saturday, October 4th. So I'm expecting something really dramatic to happen around that Wednesday time frame. We're down quite a bit. I mean, we haven't even made I think we've made just about a 10% correction in the New York Stock Exchange Index now. But of course, the other indices are, lagging behind, but not by much. The fact that the stocks have been able to take out the August lows so quickly is really, really negative. And that divergence that we've had here is incredibly negative. But remember, when we come in here on Monday morning with Mercury going retrograde, that's exactly what happened on the Monday of October the 19th, and then the market broke. However, let me make one thing clear. In 1987, if you would have bought on the 20th of October, that was the best buying opportunity of the decade other than 1982. Because the market was down 33%, 16% in one day, and from there it went from around, I believe, 1,660 in the Dow all the way up to where we got to is 17,311. So that was the best buying opportunity of all time, was following that Mercury retrograde in 1987. Seldom do the markets repeat exactly like what happened in 1987. I just think that it's worthy of keeping an eye on this. of where we are. If we happen to close really badly tomorrow, and really badly to me is that you would go below the April lows in the New York Stock Exchange Index, and you would also be below the August lows in the Dow Jones Industrial Average, which would be down another 300 or 400 points. You could very easily see a meltdown occur at the beginning of the week, and that's why you need to be very, very careful. You need to be careful all the time, but particularly right now because we have all of these things happening. And this divergence that we have is just really between the New York Stock Exchange Index and the Dow. We haven't seen that before, folks. That's an outlier event. This market has a correlation, the Dow with the New York Stock Exchange Index of better than 90%, and we've had a double divergence, one in July when the NYSE couldn't make new highs and the Dow did, and then again in September when the Dow went up and made a 1.27 expansion, and all the New York Stock Exchange Index could do was make a double top. So the patterns that we're looking at here are extremely negative right now, and we're coming in, it's going to be hard. First of all, it's going to be difficult for the market to reverse on a Friday because we're in a down week. And remember that when you're in an up week and it's on a Friday, you have a high probability of closing higher. The reverse happens in a down week because the people that are putting their money to work want to wait until Monday morning to see what happens. There's no sense buying on Friday when they can wait over the weekend. That's a statistic that's been in the market for a great deal of time. It's nothing new. But remember, when you're down hard on the week and it's on a Friday, it's very difficult, to reverse the market on that day. It does happen at times, but it's more of an anomaly, than anything else. So we want to watch that. We've been watching the Dow Jones Transportation Index. We've had some targets on that one, and we're very, very close to fulfilling those targets. We've already made the 61% retracement of the low from August the 4th in the Dow Jones Transportation, and we believe that we've got a lot farther to go here. And we should be able to see if we get a rally, into early next week, because we're down several weeks now, and that doesn't mean that we can't go down more. But we're having a normal correction. This is the correction that we're having in the transportations is exactly what happened during the July 21st to the August 5th period. That same amount. The transportations dropped about 600 points, and we're down about 600 points, almost 600 points exactly from the high that we made back on September the 19th. So it's important that this harmony that's there could still show its face again, and we could get a rally from this level. But it's still quite early. The most amazing thing to me, folks, is what Basil talked about. Was the VIX index, the fact that it is not actually, really screaming and moving a great deal higher. It should be trading up around the area of around 1925 based on what the S&P and the Dow Jones has done. But for some reason, you'll be able to see the divergence here because it's really quite unique when you see this, because the S&P is lagging far behind the VIX index. The VIX index is lagging far behind, because if it were equal, the VIX would be trading up at around 1950, and it's only trading at 1767, just barely above the high we made on August the 4th. So that is something that I don't know what it means. Some smart people sent me some things on what it means, and I read it, and I wasn't smart enough to figure it out. So I said, well, I'll just look at the chart. And it's telling you that it should be a lot stronger in the VIX index, and in fact, it doesn't. It's not as strong as it should be on a per capita basis. Going tick for tick, which it usually runs very closely, we should be trading up at around 1950 in the VIX, not at 1750. And it's trading exactly where it was back on August the 4th. I mean, that's not. That tells you that there's absolutely no fear in the market. Now, fear could come into the market, either Friday or Monday morning. Something really dramatic could happen, and it would make it, even more scarier than what we have it right now. But right now, the market is very orderly. It's held up against really strong support. I mentioned the Dow was just made a 61% retracement off of the August lows. The New York Stock Exchange Index has made a 786 retracement off of the lows that we made in April, and the S&P 500 has made a 786 retracement from the lows that we made back in August also. So the overall broad stock market is a lot weaker than the S&P and the Dow Jones, but they are still hitting, pretty major support. You'll be able to see this 786 retracement here in the S&P cash as I come to put this. Oh dear, hold on one second here. We'll be able to see this in just one moment here, and then we will. The good thing is, folks, we're having really great volatility. That's the really wonderful thing that's happening to us. Now, if you'll look at this cash S&P chart, which is only 500 charts, it's only 500 stocks. It has made a 786 retracement off of our August lows. Okay, and if we go back to our lows that we made way back in April, we are making just a little below a 382 retracement of those lows. So the overall market is just a normal market thus far. We need the rest of the market to get below the August lows. We've done that in the big market, the New York Stock Exchange Index. We have definitely done that. We have not done it in the NASDAQ. We have not done it in the S&P 500. So it's still being skewed by these three indices, the NASDAQ, the Dow, and the S&P 500, whereas the broad market is far weaker than the rest of the market. We've got a lot of astro things happening this coming week, starting with Saturday. We have Mercury goes retrograde that I mentioned before, and then on the holiday of Yom Kippur, we're going to have a full moon and a lunar eclipse. That's going to be on October the 8th, and we will see if that is going to be an interesting spot to take a look at that. So we'll look at. Excuse me, I made a very bad mistake. Yom Kippur is Friday, and that's the high holy day for the Hebrew faith, and it's a very important holiday, and it is their Day of Atonement. And we luckily, Sarah and I, we have some very, very close Jewish friends, and we really respect their religious beliefs. That boy, they really pray a lot on that day. Sarah and I, we pray the other 364 days of the year. We just don't pray on that one day. We do the rest of the 364s. Anyway, one other thing about the thing in Hong Kong that's going on, we have the rioting is still going on. It wasn't helped yesterday when Secretary of State Kerry came on and said that the Chinese were wrong, that they should give a referendum votes to the people in Hong Kong, and that just incited more problems. And it's a holiday there, so there's more people out tonight. So, okay, we got the Dow down about 74. We've got gold coming back to be up $1, and bonds rallying.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, we're back, folks, and I've posted into Tiger TV the painting that is on my wall. It was done by one of the wives of one of my customers at Drexel back in 1978. It's a 3 by 3 feet by 3 feet oil painting. Elsie Darnielle was the lady that painted it for me. She was a very famous artist in California. She did quite a bit of work for Ronnie and Nancy Reagan. And it's a really beautiful painting, and it has the patterns that I looked at during that time, and it has the 10 rules that I put down. These were posted on a billboard behind my office where my desk was, and what they did was they came in and took pictures of it, and then she from those pictures she painted, what it would look like, and so it became a beautiful work of art. But the first rule is, and this is still true to this day, going back 40 years ago, 50 years, 100 years, doesn't make any difference. Never add to a losing position, folks. If you add to a losing position, you're doing two things. One, you're already wrong in the market, and two, you're increasing your risk exposure. Number two is, when in doubt, stay out. Not having a position is a good thing. You're just waiting for something. It's much better to be out of a market wishing you were in than in a market wishing you were out. Number three, plan your trading and stick to it. Don't just come in and throw darts at the market each day. Try to have a plan of where you want to be a buyer or seller and how much you want to risk. Because we don't know how much we can win on a trade. We don't know whether they're going to win or lose, so all you can do is to prepare the risk of what you're going to take when you're placing a trade, and the only way you can do that is if you plan your trading. Number 4, take equity out for rainy day periods and to enjoy yourself and your family and your friends. So anytime you've had a good win, try to share it with somebody else that has a lot less than you. Number 5, never close a trade without a valid reason. That's a very important rule. Amos Hofstadter at Commodity Corporation thought it was one of the more important ones. He had a little plastic sign tacked on his computer that said pretty much the same thing, the reasons for getting in or out of a trade. Number 6 is stops are placed for your protection. Use them. The market does not honor desktops. They have to be in the market. Just because it's a mental stop, it's not going to be filled. So make sure that you do have some type of a stop in to protect yourself when you are wrong, and inevitably you are going to be wrong, and usually after a long string of winners you're going to be extremely wrong, and that's the one that could really hurt you. So try to protect yourself against that. Remember that the only true facts in commodity trading, stock trading, or any kind of speculation are fear and greed, and that's the bottom line. If prices are going up, there's more buyers. If prices are going down, there's more sellers. And fear is a greater emotion than greed because it brings out all of the physical characteristics that you have, like your sweating and your dilated pupils and a chalky white mouth, and all those things will be shown in that. With greed, you don't get that. You're just sitting there with a Cheshire cat, like a Cheshire cat, with a big smile on your face. Number 7 is never allow, number 8, never allow a substantial profit to turn into a loss. Number 9 is distribute risk equally over several markets, and that's real easy in these days because we have so many things with foreign exchange and stocks and bonds and commodities and just everything else. It's very, very important. And number 10 is never hedge a losing position. This is actually a mirror image of the one. Number 1 is never add to a losing position. Well, if you have a losing position and you hedge yourself, in other words, buy something against it to protect yourself, you've not done anything but increased your problems, because now you have 2 decisions to make. You have to decide which leg of the spread that you have to get out on. So you don't want to do that. If you got a bad position, just get out of it. Go on to the next trade. It's all about probabilities. It's all about numbers. So those are the rules that I try to talk about when I'm giving lectures and things like that. They are very, very sound. They come from a whole lot of smart people through the years that shared their information, from Jesse Livermore to Bernard Baruch, John D. Rockefeller. There's just so many of them. Warren Buffett, even he has some wonderful ones that are very, very good. But you got to have some tenets or foundations of what this business is all about, because it truly is a business, and you've got to be able to function under it by using sound money management, because the technical part of this is the real easy part. The hard part is the money management and the psychology of what we're doing. So remember that that's what we're looking at. I'll be right back. When we get back, we're going to take a look at the 1987 stock market again one more time, and I want to talk about it one more time.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, folks, we're going to take a look here at the crude oil market. We have made a 3-drive to a bottom pattern today based on the daily chart. We've gone a little below the 61% retracement. We're trading almost exactly at the 61% retracement as we speak. That means that if we close above 91 in the crude oil, we're trading at around 90.35 right now. That would tell us that this would be pretty close to a reversal day because we'd be coming $2.50 per barrel off of the bottom that we made last night. So this will be very interesting to watch our oil today. However, if we go back below the 88 level now, which is another $2 from where we are right now, this means the acceleration is going to continue to the downside, and we'll be looking at something around $82 to $75 a barrel based on crude oil. But right now we've hit some really strong support. Whether that's going to hold or not, remains to be seen. It's just a probability. That's all it is. It's nothing more than that. So remember, everything that we're doing here is related to probabilities, no more, no less. So we want to watch that very, very closely. We have the same situation occurring in gasoline futures and also in heating oil. They're making some major corrections at strong fib points as we speak. So this is a big day that we're having in the oil complex. The grain markets, I'm really not going to spend any time with today because they just keep, selling off. They have these little tiny rallies of 5 to 8 cents. And then they go on to make lower lows. So there's really not a pattern to be a buyer or a seller in the grains because they just keep drifting lower with no chance of a sustained rally because the weather looks like it's going to be really nice, through harvest. And we're into the harvest next week, so we'll be able to watch that, very, very closely. Price line must be going down. We got our caller from Charlie in May. How are you, my friend?
I've been very busy the last week.
I can imagine. Everybody has. That's for sure. What can I do for you? Let me guess. It must be price line.
It's close.
Okay. What can I do for you, my friend? We're getting close to your price objective that you've been waiting for some time now.
That's why I want to check that. I want to, like you got too much in your head and you think you're going to win forever. So you're my safety valve, making sure that I don't get a big head.
You just hit the only indicator that is 100%, Charlie, and that is when you think you're calculating how much money you're making on a trade. The first thing you should do is to pick up the telephone and take the trade off, because what you've just done is you've triggered the greed mechanism. You really have. And there's a little butterfly pattern forming here in price line today down at that 120 level that we talked about just about 2 weeks ago when you called. We thought that they could easily get to that level. And so I would, you just did it. Larry Williams told me about that indicator. It's called the telephone indicator, because you pick up the telephone before you get out of your position, because you just triggered the greed indicator. And believe me, it doesn't fail. It's a pretty powerful thing.
Do you think it's 11:20? Is that what your thinking is?
Well, it hit the low today was 11. It was 11:19 and change. So that's pretty close, don't you think?
Yeah, I think so.
Yeah, 11:19.05, and we were looking at 11:20. It's 11:26 right now. So I would think this would be the time to book some of it, because it's certainly come down, a lot from when you sold up around 13:20.
Right. I've actually been adding as I've been going down.
I know you have.
And now the question is, now I got to start taking some off to get the cash position back up.
You just answered your own question. How you handle it, I don't know, but you just answered the question that I think you have to answer. Is when you start thinking about how much money you made, boy, that greed mechanism is firing in all cylinders, and we know how that usually ends. So just be really careful in here, Charlie.
At the 11:20, does it represent any time of number or line?
No. It's the end of a butterfly, a 1.27 expansion of the range over the past month. That came in at 11:20, and of course the low today was 11:19 and change. So that should be it. But on a $125 stock, that's not a lot, 6 points. So that's what it looks like to me. It's not so much the price; it's the attitude of what you said when you came on the show, Charlie. That's where the problem is.
Right, I see what you're saying, and that's why I like talking to you, because you put sense back in the brain, and frankly, I've made a lot of money, and I've managed to lose it somehow, but I learned to just diversify, just take it out of one area and move it somewhere else. And now in this situation, you're saying 11:20 looks like pretty much where it goes. I thought somewhere around a little under 1100.
They could easily do that, but the fact that it hit that exact number today makes me believe that it's getting pretty close. So just be careful, my friend. That's all I can tell you.
What are your thoughts on Friday, the market? I mean, I didn't hear before. I wasn't listening.
It's just going to be very interesting, what happens on Friday, because if we're down hard again, we're not down hard today. We were down 112, I believe, at one time. We're down about 80 right now in the Dow Jones. So, nothing really big. We're going to see days of 500, 600, 700 on the downside in the Dow, sometime probably in October. And so, this market's telling us, get ready for them. It's telling you that the volatility is coming. We have a little more volatility than we've had the last few months, but this is just the start of it. It's going to get really, really volatile, both up and down.
What's your email address? I want to send you an email with some information.
You can't, Charlie. You can't send a case of champagne through email. You know that, don't you?
Well, I'm actually going to go through Arizona.
Oh, okay. No, it's Larry Pesavento. It's Larry Pesavento at gmail.com.
Gmail.com.
Yes.
and maybe I thought I'd stop. I know I drive to Tucson, and I go all the way through to San Diego. So I'm wondering if I send you an email, maybe we can see each other.
If you're in this area, we'll definitely meet. I'll be happy to.
Okay. Now, are you near, like, Tucson, or what city are you near?
I'm in the foothills of the mountains of Tucson, North Tucson. It's called the Catalina Foothills.
Okay. I'll email you and keep you in touch.
Thank you, Charlie, for calling in, and good luck on the stock. Just be real careful down in here because you've reached some price objectives that are very important.
I agree. Sometimes it's better to take a few bucks less and take the money and run.
Well, Charlie, you're talking a little more than a few bucks on this puppy because it trades at $11.25.
Yeah, it's done about 200, right? So it's done well. But I thought it bounced back up and time to reshort again. It looks like it could bounce, but I thank you for the information. I'll review it and I'll stay in touch with you. And thanks for the help.
Yeah, thank you very much. The
Bye.
next one we want to take a look at, folks, here is the Treasury note market because we are making a 786 retracement on the Treasury notes from the highs we made back in August. This is also an indication that, there's not a whole lot of fear coming into the market. There hasn't been much of a flight to quality in either bonds or notes during this time. So the notes are within just a tick or two of the exact 786 of this move, so I'm assuming that rates will start down up again just as soon as this cycle should come to an end, probably by Monday or Tuesday, I would think, at the latest. That's what I would assume is going to happen with the Treasury notes. Now, the note market is at least 6 times or more bigger than the bond market, and the bond market has actually gone above the 786 by quite a bit. It's trading right at the 786 right now at 139.14, but it's still holding, at that level. We did get as high as 140.04 in the bonds yesterday during the big rundown in stocks, and so we're sort of keeping an eye on what's going on. This is a very orderly sell-off today, folks. Like I mentioned before, the most we've been down on the Dow was I saw 112. And that was right near the 61% retracement of the August lows. At that time when we came on the air, we had the New York Stock Exchange Index making a 786 retracement of the April lows, and they were already below the August lows, which is another negative sign. So no matter what happens over these next few days, if we get a rally, it's going to be a short covering rally, and you should find a place to put on get out of the longs that you still have possibly, and then, or else, look to go short the market because it does have some really bearish things happening right now. That divergence that we had in July and again in September, I keep banging on the drum because I have to bang on it slowly, but believe me, that is very, very important. It's never been seen before, so history usually has a way of sneaking up on us if we're not paying attention, so we need to look at that. The NASDAQ has still held up relatively well, during this time, but we really want to take a look at this. I'm not going to spend any time at all with the grains. I wanted to do a little bit more here with gold because we're coming very, very close to what I think is a potential major bottom in the gold market. We haven't hit it yet. Silver has been also trying to do the same thing. It'll just give me a second here to get this ready, and we will be able to take a look at it. And I think we've got one more push down to a little bit below that psychological level of 1,200, probably around 1190, 1195. And if we get into that zone, I would think that you'd have to take a look at gold, from the long side. So, we'll just see if that works or not. Okay, we got a call from Denver, Colorado. Warren, are you there?
Yes, Larry, I am.
What can I do for you?
I'd like to look at the euro because Mario Draghi was out talking today.
Mario Draghi, yes, sir. If you ever use Dragon, in the speech recognition,
right?
And if you say Mario Draghi, do you know what comes up?
No.
Mario Draghi.
Oh, yeah.
Yeah, it's really funny. I didn't believe it. Someone told me that, and I used Dragon, quite a bit. And when I looked at it, I said, "Oh my gosh, I can't believe it." But that's the truth. I guess it's close enough. So who knows?
Well, he's going to put Europe on the quantitative easing drugs.
Oh, well, everybody does that. It works at every place but in our family here. That's the only thing that I can, let you know for sure that, what we're looking at. Now, this is my 2 cents worth. The 786 on the euro, Warren, comes in at around the 125.20 level. We've been down today. We got as low as 125. What did we get? 125.70. And so, 125.70 was our low, so within about 20 or 30 points of what I think could be the major 786. But at any time here, you could get one monster short covering rally because it's been down for so many weeks. It's been down for well over 20 weeks, other than the little 2 or 3 week rally we had in late June. But it still looks bearish to me.
Okay. Well, I mean, I was just looking for 125 to come up here pretty quick. I didn't know if it could make it to there.
Well, we got to 125.70 today, and we're trading at 126.68. We're only up about 100 pips off the bottom, which is not too bad considering you had a lot of news and stuff. So, but it has held so far. But long term, if you look at the euro chart, we've been bearish since 2008 when we made the butterfly pattern up there at the 160 level. And then all of the highs since that time, every yearly high has been lower than the previous year's high. And so it's been in a downtrend for a considerably length of time, and it doesn't look like it wants to change. It looks like it wants to accelerate with a target around par at about 100.
Oh, my goodness, yeah, that's a long ways down from here. Yeah. That's years away maybe, huh?
Well, yeah, but, this has a history. When it started trading in 1999, they brought it out, I believe, at 130, and it went from 130 down to 85. Then it went from 85 up to 165, and then I believe it went back to about 90 again, and then back up to 160. So it's been a round robin for this thing. I mean, it's been all over the map. So you can't just say it's pegged at one price because it moves a lot. And right now we're in a downtrend, so we'll see if that continues.
Okay. I mean, I was just trying to get this strong dollar thing, straightened out in my head is really what I wanted to do. And it's 125 is 786, right?
Yes, sir. That's exactly where it comes in at. 125 is a 786 on the weekly euro.
Nice and even. Okay, thanks, Larry.
All right. Thanks for calling in, Warren. Appreciate the call. We look at the Japanese yen also has had a big move. The Japanese yen versus the dollar. We should take a look at that because it's the Japan economy, I believe, is the 3rd or 4th largest in the world, and they also have the quantitative easing, over in that area. We've had a big reversal here the last couple of days in the yen, mainly because of the dollar hitting that strong level of. Let me get the weekly up so we can see this much clearer. When the dollar hit the 86.26 level, that was a very, very strong number in the in the dollar index. And remember, the dollar index this week set an all-time record. This was the 12th week in a row that the dollar index had been up. Never in the history of the 30 years that they've actually calculated the dollar index has it done that. Okay, we got the Dow down about 82, the S&P down 15.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN. Now, back to the Futures Hour.
Okay, we're back, folks, and I'd like to just go over the possible scenarios that we have coming in to this coming few days. We've got a Bradley date that is due tomorrow. On Monday. It's on the 5th. It's on Sunday. We have Mercury going retrograde on Saturday the 4th, and then we have a lunar eclipse and full moon on October the 8th, which will be Wednesday. So we're going to be watching this very, very closely. Today's low that we made in the New York Stock Exchange Index was an exact low off of the low from August the 10th of this year. So it's held that level. That was happening when we came on the air at 10,440, and we're up about 30 points, which is nothing right now, but it has a chance here to hold from this level. And what you want to be watching for is a 3-day rally. Well, I'm not going to be on Friday. That's a blessing to all of us. But on Monday, we'll have a pretty good idea of what the scenario is, because if we're snapping back really fast, that's what you'd love to see, would be a very quick snapback rally into the lunar eclipse and full moon of Wednesday. That would be a very fast 3-day rally, and that rally would most probably get ready to be sold, because once we go back below these April lows again, look out. There's going to be, this is a very, very orderly sell-off that we have right now. It's incredibly orderly. You can see it in the VIX index. You can see it in the Treasury bonds. You know, the Dow Jones is only at a 61% retracement. The NASDAQ is only at a 61% retracement. And so all of these are holding up relatively well. And it's no panic as of yet. I think the panic's coming, but it's not coming yet. So it probably won't happen until probably Wednesday after we get a rally, if in fact we do. But if we close badly, either Friday really badly, down another couple hundred points from where we are now in the Dow Jones, that would put the Dow Jones around 16,550, then it's going to be in big trouble. And you want to be, you just don't want to be in one of those days like we had 27 years ago when we had that October 19th type day. And believe me, with all the margin that's out there and all the weapons of the trading weapons of mass destruction that are out there, they could easily affect like that, because these banks think they have they're fail safe, but if they run into really, really bad problems, there's not going to be too much that anybody can do to really help them. And whether that occurs or not, remains to be seen. All I'm trying to do is just be a little careful in here that if we close really badly on Friday, look out Monday. That's that will happen, because you're going to have a Friday, then Saturday, Sunday, and then Monday. So Monday could really be nasty if we close really badly, today or tomorrow, down another couple hundred points in the Dow from where we are right now. That would put the Dow at around 16,550, somewhere in that ballpark. Then you'd say this thing is really beginning to fall apart. And if that is in fact the case, we'll have to make adjustments, because we're going to go a great deal lower over a long period of time, because these big patterns that have formed, these are yearly patterns, folks, that took 14, 15 years to complete these patterns. And it's a very, very interesting times that we live in, the old Chinese curse. May you live in interesting times. We certainly do when you're in the financial agendas in these markets nowadays. So far, the market has topped from September 3rd. It topped on the 4th, which was one day away from where it topped in 1929. Whether it's going to be a 1929 type move or not, we won't know. But if it starts to show similarities, you'll know it. Live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.